cement counters as well today?
Yeah, good morning. I think spot on. The cement companies definitely looks, I think, they're interesting from the point of view of two counts. One, the volume-led growth, capacity utilizations included, is expected to be higher in the current financial year. Couple of reasons. Of course, I think the construction activity which continues, so that gives the strength. More importantly, I think the fuel cost, which is basically remaining lower, which is an energy segment, I think, within the commodity space. I believe that I think it's expected to even produce better results, largely because of the fact that on one side you have got a volume growth, on the other side the profitability growth. I think both of them put together giving the advantage to many of the cement companies to register better profit performance in the current financial year. UltraTech being the largest, ECC Ambuja would be next one to follow. I think the larger cement companies with a better market reach are in a better position to create the impact as far as I think the profit performance is concerned. So we remain distinctly positive about the possibilities. In selective pockets where the companies have expanded the capacities and have been in a position to register better growth, I think they too could possibly have relatively better performance than what they did in the previous year. So certainly this year could be, I think, a year of cement companies as far as I think the growth in the profit is concerned.
Devin, how much of the damage from the earnings from RIL is now in the price already adjusted in the fall in the stock yesterday? Because it was a tough quarter, but that growth confidence that one was hoping for, that has sort of, refused to play out. The guidance, of course, continues to be optimistic with that plan to double the earnings in 2029, despite the misses on both retail as well as, the fuel refining segments.
Yeah, I think more than the disappointment on the quarterly results, I think the concern is also due to the fact that Russian crude oil sanctions and the resultant impact coming on to the exports of refinery products. I think that's where the concern has been largely overhanging in the mind of the investors, and that's what probably I gather is a root cause of the fall in the stock price yesterday, despite of good results. Per se, I think the results are not bad. On the contrary, I feel that consumer-facing businesses, the platform, Geo platform, as well as the retail business, both of them have shown remarkably high amount of performance. In fact, I think Geo platform promises to grow at 20% plus rate of CAGR growth on EBITDA front as well. And as a result of which, it is giving a vision of around 1 lakh crore EBITDA making company in next 2.5 to 3 years time from now. So certainly, I think these businesses are looking relatively more stronger than they were ever before. This crude overtime issue is basically the cause of concern at this point of time. Sooner we get some handle on it, I think the stock should re-rate. But fundamentals, according to me, remains quite positive and distinct from Reliance at this point of time.
Okay, so that's the take on Reliance. Also want to get your sense on the entire wires and cable space, because while Polycab's numbers were strong, Havells doesn't seem to be following that trajectory. Do you believe this is only on the back of weak summer demand? You have copper prices at play, or do you believe that there are certain fundamentals that are marring the sector right now?
No, the headwinds are definitely there as far as the copper prices, the profitability issue, and also at the same time, the white goods segment, I think, which you alluded to, is giving definitely I think a good challenge to most of the players, because everybody seems to have expanded into this space. And at the same time, I think the business growth is not as high as I think one would have thought about. So incumbents are also there in the game, and as a result of which, you are not getting the margin which otherwise you would like to get. So in my viewpoint, I think the cable business doing quite well. Of course, Polycab, I think, is a different kind of a business. That model itself is a relatively more rich model as far as I think the profitability and the segment focus is concerned. But we believe that I think the white goods segment would continue to have the same level of headwinds or challenges. Even though there is a growth available, the margins would be always under pressure.
All right, so that's the take coming in on Havells, and let's watch out for some of the other companies as well today. But the other stock that is going to be in focus today, that is Bajaj Finance, because Bajaj Finance Managing Director Anup Kumar Saha has resigned from his position due to the personal reasons, and the company has assigned the additional responsibility of MD to Mr. Rajiv Jain and redesignated his position as Vice Chairman and MD till the remainder of his term that ends on March 31st, 2028. Let's get in more details on this one. Varun is here to evaluate what Jeffrey's note says about the succession plan going ahead. Varun.
Well, so it's just been a quarter and the newly appointed MD, Mr. Anup Saha, has actually resigned from Bajaj Finance, and Rajiv Jain would be taking the position of Vice Chairman and MD of the company till March 2028. Now, Jeffries has come out with a note where they have a buy call on the stock and a price target of 1,044 rupees. They still call Bajaj Finance as the most preferred pick in the overall NBFC space. They say that now you have to watch for the overall succession planning. They say that the overall management of this company is actually a seasoned management, and given Rajiv's stature and relationship with the stakeholders, they expect this transition to be smooth, and the focus of the company will stay on the overall growth, asset quality and profitability. In fact, they say that the company would actually find a suitable candidate in the near term to take and also groom them to take up the role of CEO and MD. Rajiv may pull back on an advisory role for Bajaj Finserv, and they say that if this event could be slightly negative, sentimental negative for this company, and they feel that the franchisee is on a good footing and will benefit from the lower rates, improving asset quality and also uptake in the overall credit demand. They still believe that from FY25 to 28 the company would deliver a 20% CAGR growth in profit, and also the ROEs are expected to be at around 19% till FY26. So operations, basically the overall growth profile of the company will not be impacted. It would be a sentimental impact which you can see on Bajaj Finance today because of this resignation. That is what Jeffrey says, and still Bajaj Finance is their preferred pick in the overall NBFC space.
Right, Varun, thanks for joining us with that. Devin, any views on Bajaj Finance in terms of this sudden management rejig that we've seen? Any views on that?
Well, I think this is quite challenging environment, frankly. Any newcomer taking up the position, having a strong legacy, is always going to find it challenging to physically score in the environment in which we all are operating today. So not completely surprised. I think in the corporate world, I think this kind of jerks do come up from time to time. I think the top level management is quite capable of handling this particular situation. And in my viewpoint, I think this company has always demonstrated that their ability to, I think, build a good team, they have always demonstrated. So we'll wait and see, I think, who the next person they will name as for running the MD position. But in my viewpoint, Rajiv Jain taking over the charge until March 28, I believe that I think they are very clear with their objective that they want to install a very stable and a seasoned person in the job.
Devin, how much do you think ICICI Bank, given its NIM's resilience, non-core income actually lifting the earnings, and then HDFC Bank, which also posted a very healthy quarter, the focus, of course, is now shifted to loan growth. How much more do you think these stocks can fire, because they're practically, in any case, at an all-time peak?
Well, on one side, credit growth is reasonably good in my viewpoint. I think the consumer finance, consumer credit definitely, I think, is promising to be better in the current year, largely because of the fact that you have a higher amount of disposable income in the hands due to the tax exemption limits increased. And because of that, I think the spending also increases. And along with that spending, the finance also requirement also goes up. So this is a cycle. At the same time, I think the cost of funds coming down is definitely taking a good side. So all in all put together, I would think that this company with a larger EM base could possibly grow at around 15% kind of an average growth, at least in the next 2 to 3 years from now. Bajaj Finance kind of company is distinctly different, I think, which is promising to grow about 20% rate of growth. So in my viewpoint, I think the consumer is a king at this point of time, and this is where probably this companies could register better performance. Fortunately, valuation-wise, they are not so expensive. These companies are trading, I think, reasonably at a considerate valuation, as I call it as. So I think there is an opportunity in the falling market to buy this stock into the portfolio.
All right, so financials will be the key to watch out for. But along with that, Aditya Agrawal, help us with your take on Bajaj Finance. How is the chart setup looking like? Because just for the past 2 days, we have already seen a good move on Bajaj Finance. What are the key levels to watch out here?
So actually, yesterday was a good close for the stock. It has broken out from a downward sloping trend line. Now today we need to watch out how the stock opens, and anywhere between 920 to 910 is a strong support area for the stock. And my sense is I don't see too much of a correction in the event of this negative news flow that is there in front of us this morning. If anywhere it comes close to about 920, 915, I would be a buyer in the stock. Look for a target of 1050 to about 1100 on the upside. And I also feel that this is one of the best picks within the NBFC space, and one stock that you should clearly own in your portfolio from medium to longer term time horizon, and you will see levels of 1100 in at least about a year's time frame. And you should actually latch on to this opportunity if you see any correction closer to about 920 and 910.
Okay, so that's the chart check on Bajaj Finance. Other capital market related stocks could be in focus today because SEBI has lifted key trading restrictions on the Jane Street Group after the firm created an escrow account worth more than 4,800 crore rupees. While Jane Street can now resume trading and investments in the Indian market, SEBI has directed exchanges to closely monitor the firm's activity. Let's go across to Ankur Mishra to understand what exactly this new modified order is and how much has the dust really cleared when it comes to Jane Street? Ankur.
Yes, Jane Street is no longer barred from placing orders in Indian securities market as market regulator SEBI has now lifted restrictions with few conditions. What are these conditions? The stock exchanges will monitor all future trades and positions of Jane Street, and this has been done after Jane Street has complied with interim order of market regulator SEBI. Remember, SEBI had passed an interim order against Jane Street alleging unfair trade practices, manipulative trading, which has been done by Jane Street. In fact, there were allegations that few of the days Jane Street has actually used options in order to manipulate the trading of that day. So all these allegations still continues because final order is yet to be passed by market regulator SEBI. These restrictions which are being eased now, that does not mean that Jane Street has got a clean sheet from SEBI. In fact, the investigations will continue. All will depend on the final order which will be passed by SEBI after due considerations and investigations which is being conducted by the market regulator. But for now, a bit of relief for Jane Street as they can resume trading in Indian securities market.
All right, thank you so much, Ankur, for getting us all those details. A bit of a relief coming in from Jane Street, and seems like the capital market plays are going to be in focus. But Aditya Arora, help us with the chart check on BSC because that stock has been down and out in trade of late. Given the fact because of all this that was happening, there were some concerns that how the volumes will bode well for some of the options there. But how do you see BSC on the charts? It's already been a 3% jump yesterday. How can we expect the stock to move from these levels?
Sure. I think the stock has been stuck in a range, and most of the market sentiment, the stock is also showing similar kind of movement. So important levels to watch out on this one would be once the stock breaks 2,600, the momentum could again build up in this counter on the upside. And on the downside, I think it has important support of 2,350. Once that is broken, I think long term or medium term topish patterns could form, and the stock could retrace to lower levels like 2,000 to 1,800 kind of level. So I remain pretty neutral to bearish on this counter. I think in the short term, the momentum could build up once we break 2,600, but that would be an opportunity to lighten up the positions.
All
Okay,
right. So those are the that's the take coming in on BSC. But with this, let's also take some of the mid-cap ideas from both of our experts. And Aditya Agrawal, you go first. Tell us which is the stock that you're eyeing this morning within the mid-cap space.
So actually, when we are talking about this capital market space, Srishti. One stock that actually looks interesting to me is Angel One. Stock did witness a bit of a cool off from the recent highs of 3,300 and had taken support close to about its 200 DMA recently. It's a good consolidation that we're witnessing, an excellent risk to reward opportunity from here on. So I would be a buyer in the stock with the stop loss just around 2,600 on the downside. Look for a target of 3,000 on the upside, and once that is taken out, 3,200 will be the next target. So Angel One is on my radar, and this is one stock and then which should be bought. And after this news, I think so. This will augur well for the stock as well. So with the stop loss at 2,600, I'll be a buyer in Angel One for a target of 3,000, 3,200 on the upside.
Okay, so Angel One on your radar. But Aditya Arora, what about you? What are you liking from the mid-cap end of the market?
I think UTI AMC is a stock which has been doing pretty well, and recently we have seen a multi-week breakout in this counter. So this is a good positional buy, currently trading at 1471. So this is a buy at current market price. One can keep stop loss at 1310 and target is 1650 to 1750.
All right, so let's watch out for UTI AMC. That's the mid-cap bet coming in from Aditya Arora. But with this, let's also tell you what else we are tracking in terms of the big headlines. And first up, trade tensions continue to loom as US 30% tariffs on EU could come into effect next week, and China talks progress. According to Treasury Secretary Scott Bessent, the US is hoping to leverage oil ties, but Brussels is scrambling for a last-minute deal. Mixed cues coming in from Asian markets. Japanese shares gave up the opening gains despite some signs of political stability after election setbacks. Meanwhile, Chinese indices cooled off from the multi-month high as markets bank on fresh industrial support. Oil extended losses as trade concerns linger, while gold held near the 5-week highs on the back of safe haven demand. The dollar and US yields slipped further, with traders eyeing the August 1 trade.
Outlook is positive, and that's one of the biggest reasons because of which they have overall raised the price target on this company. Nuvama has also a hold on the stock with a price target of 13,628 versus 11,859. They have raised their overall EBY/EBITDA multiple for this company from 18 times to 19 times after the management commentary and good results. And also you have Elara. They reiterate, accumulate on the stock, and they have a price target of 14,088 rupees on Ultratech after the results and good management commentary. So keep an eye on Ultratech today, because after results and good management commentary, many of the brokerage houses have increased their overall earnings estimate and raised their price target.
Okay, Varun, thanks for taking us through all of those brokerage reactions to Ultratech's earnings. Numbers were out yesterday in market hours. But let's move away from that and talk about another stock that could be in focus today on the back of a brokerage note coming in from Motilal Oswal, and that's L&T Finance, wherein they've maintained their buy rating with a target price of 250 rupees per share. They believe that L&T Finance has reported a healthy quarter this time around, and they're positioned to grow even stronger in the second half. Aditya Agarwala, what's your take on L&T Finance on the charts? It's been inching a new record high almost every day for the last 1 week, if not more. Do you see any further upside on the charts right now, or time now for some cool off?
Absolutely, Sneha. I think it's time for another leg of up move in the stock. In fact, we did see a bit of a cool off, a consolidation we can see in the stock. And back-to-back last two trading sessions, we witnessed stock up on healthy volumes. If anything, my sense is stock is going to latch on to these gains of last two trading sessions that we have witnessed. And I've got a target of 245 on the upside, which is an immediate target as far as LTF is concerned. With a stop loss somewhere around 200, one should clearly look at initiating a fresh long position here. If you already have it, continue to hold with the stop loss at 200, and 245 is something that I'm eyeing in the medium term. If that is taken out, you can definitely see higher levels. It's a very strong looking chart setup, Sneh, and I think one should clearly stay put here if you already have it, and also look at fresh buying also at current levels.
All right, that's the take coming in on L&T Finance. But Aditya Arora, a quick take on the metal pack, because of late they have been showing resilience, and today we have seen a bit of a cool off in the dollar index. Any stock that is looking good to you?
Sure. Even in our last conversation, I had maintained bullish stance on metal, and still I think there's a lot of steam left. Disclaimer, we also have recommended bullish bias to our clients in metal pack. But the stock which stands out is actually NMDC. NMDC is trading with bullish bias, and we have seen a breakout in last 2 to 3 days. So this one is a bullish candidate at 72. One can keep stop loss at 70 and target is 74 to 76.
Okay, so that's the take on some of these metal counters. But Aditya Agarwala, coming back to you, when I take a look at these pre-open rates, of course, these are very volatile right now. In a couple of minutes to market open, Eternal showing yet another 8% uptick today. We'll see where the stock actually opens. But Aditya, what's your take on what the charts for Eternal could look like today? Already a lot of run-up was seen on the stock yesterday before earnings. Even after earnings, there was a sharp spike. Do you believe this could continue, or some profit booking is what we can expect to see?
After this 8% gap up opening, I wouldn't be a buyer in the stock. I would wait for some kind of a cool off. It just might extend to levels of 300, which is the previous peak for the stock. After that, I think so there should be some kind of a cool off in the stock. Yes, it's a very strong looking chart setup. One should really have in the portfolio. If you already own it, there's no reason to exit from the stock. If you're looking for a fresh entry opportunity, maybe wait it for some time. Stock will cool off in a day or two, if not intraday today, and then that will provide you an opportunity closer to about 275, 270 as a good entry point with a stop loss at 250 on the downside. Then look for a target of 350 on the upside. If anything, I think Swiggy provides me a good opportunity at current levels because if Swiggy also has a similar kind of a numbers and management has a similar kind of a guidance, Swiggy can also be one of the candidates to look at because here you will have a better risk to reward as compared to Eternal after this 8% gap up. With a stop loss just around 395, one can actually look at Swiggy for a target of 440 to about 460 on the upside.
Right, okay, just counting down to the market open then. And while, of course, it's going to be Eternal all the way, let's see whether there's further pressure coming in on a Reliance Industries or further of an uptick coming in for ICICI Bank and HDFC Bank, which really lifted the index higher yesterday. That remains to be seen. Of course, a lot of other earnings as well. You've got Ultratech Cement. Is there going to be any sentimental move that one can see on Bajaj Finance or not? That's also something that we're going to be keeping on our radars. So that's pretty much it. The market construct. Yesterday, of course, after many days of a very, very sideways session, we finally managed to spring up a little bit, regain that 25,100 level as well. Let's see how much we can push it from here onwards. Having said that, Havells and the earnings disappointment, that's something that the street is also going to be looking out for. And maybe some weakness on the stock is something that we're going to be monitoring quite closely. The first rates then on your screens right now, and you're seeing a mildly positive start, about 0.2% higher. We're hovering around the 25,150 print. Eternal, wherein the QCOM GOV revenue has soared about a solid 127%. Blinkit, Hyperpure, the losses have narrowed. Eternal gaps up 9.5% in trade and still counting higher as we speak right now. Ultratech Cement, the management has guided for a double-digit volume growth in FY26. That stock marginally tempered, or rather marginally higher, I should say. Given SEBI's verdict now on Jane Street that they are no longer barred from trading in Indian securities, look out for what MCX, BSE and the likes may do, because as soon as this interim order came in, these stocks did cave in quite a fair bit. Right now, we're seeing a fair amount of buoyancy on BSE, which is currently around the 2560 odd level. From MRPL, the commentary has been pretty strong from the management. They're expecting GRMs to remain in high single digits in the second quarter. For PNB as well, PNB Housing that is, the Q1 numbers are in line with expectations. The asset quality has narrowed. And Titan, which has acquired that 67% stake in Damas Jewelry for $283 million, that's the other stock which is in focus. PNB Housing holding up, Titan pretty quiet in trade. It was a neutral move for CI Automotive. The Q1 revenues saw an uptick of 3.3%, but the PAT is lower by roughly about 6% or so on a year-on-year basis. Stock just about marginally higher as we speak right now. Let's now look at some of the earnings disappointment. Oberoi Realty, a case of a high base as well over there. The Q1 revenues are lower by nearly about 30%. PAT downtick of nearly about 28%. Oberoi Realty lower by 2.5% as we speak. And for Havells as well, wherein the subdued summer has impacted their Q1 clearly, and the cables and wires segment has seen a volume growth of 20 to 21%. Bajaj Finance, let's see whether there is any sentimental reaction to Anup Saha resigning from the post of MD. Not quite, holding up 1%. Solid move, 955 is where that stock is right now.
All right, those are some of the movers, but well, of course, Oberoi Realty is one of the other counters that is down in trade. Almost a 2% decline is what we are seeing. And even stocks like AU Small Finance Bank and Bandhan Bank, rather, the selling pressure still persists. Almost 1 to 2% cut in some of these counters. Voltas as well, along with Havells, is down almost a 1% decline over there. But also, let's have a look at some of the upcoming earning candidates, because today Paytm is going to be in focus, and just heading towards the numbers, the stock is holding on to the gains of 1%, while of course Dixon Tech will also be the other counter that will be in focus, and that stock too is absolutely flat, and Colgate-Palmolive as well trading flat right now. So all in all, seems like a good start for the markets. 25,153 is where Nifty at, while Nifty Bank holding on to the gains of almost 170 odd points. But Aditya Arora rather, help us with your first take on the market opening and your first trade ideas as well.
I think market is opening pretty strong and also in line with the expectation that strength will continue and bulls will have an upper hand. I think the strength could build on, as yesterday Nifty had underperformed Bank Nifty. I think today it could be yesterday also we saw good reversal in Nifty in last 1 hour, and I think the strength could again build on in Nifty, led by strength in IT pack and Reliance. I think Reliance is also pretty oversold, so some recovery over there could push Nifty higher. So on index front, I think we are inching towards levels like 25,250 to 25,400. So continue to maintain bullish bias on index front. And Poonawalla FinCorp is the stock which I am looking out for in the opening trade. Currently trading at 462.85. This is a bullish candidate. One can keep stop loss at 450 and target should be 474 to 480. And the stocks which I've discussed and on index, we maintain bullish bias. And we have also recommended to our clients. So that's a basic disclaimer over there.
Anshul Sehgal as well on the show. Anshul, hi. Can't get your eyes off from the move on Eternal. I mean, the stock moved up yesterday too, and right now it's almost clocking in a 10% move.
Yes, morning, Aisha. Pleasure to be with you. Yes, Eternal and that space as a whole has surprised positively. What's happened really is that there was expectation of margin contraction because of higher costs on particularly the quick commerce segment. And really in that one segment, we've seen margin expansion for the company, which means that the competitive intensity seems to be easing. At least that's what the market is estimating given the results. And if that is the case, given the growth, which is somewhere close to 130%, it looks like this stock it has room for re-rating, because in recent times, it has been derated quite meaningfully. Not only this particular stock, but the space as a whole. Of course, there is another large player who's